Hello traders, you're welcome to my YouTube channel, and I hope you're all doing well, and I really hope your week was fantastic and okay. So in this lesson today, we're going to talk about the easiest way. In fact, I call it my secret way to passing the FTMO challenge and even towards making 1 million US dollars. So please stay tuned and catch up until the end of this video, because I'm sure I've brought value that a lot of people don't talk about. There are many things that everyone else doesn't talk about. I'm going to give you examples on how we can go about this lesson we are talking about today. So many traders out there come to YouTube and they start posing with the Lamborghinis, with the Porsche houses, and they don't in reality show you how they got this all. And nobody is here to talk about the exact hurdles that we go through in trading. They only come and show you a funny, simple strategy, and you get to try to lure up you into you buying their courses. So they come in disguise of this, but yet they want to sell the courses to you. I'm not here to sell any course. In fact, my goal in this series is to make sure that I change traders and I create new and improved, consistently profitable traders in the forex trading market. So please, if you want to be part of this, please smash that like button, subscribe so that you can be able to catch all my latest videos that I'll be releasing timely, so that at least we can all improve into this. So to start it all over, trading is part. If you have not caught up, again, if you've not caught up with my the latest video where I was talking about how to make 1 million US dollars from FTMO or personal account, please catch it, because it starts from there. Trading is about three major things, and that is having a proven, statistically proven and tested strategy that has an edge in the market, or that which contributes about 10%, and then having a good, proper risk management strategy. So today we're talking about risk management, which contributes about 20% of your success in trading. We have always seen that, you see, nobody talks about this. So but today I want to unveil all this. So if you're ready, please get a pen and paper and let's talk about this. So one of the things that I personally use that helps me to pass these FTMO challenges and actually to be a profitable trader is risk management. Risk management means a lot of different things to different people, but the truth about risk management is that it is the one that is going to save you or break you in this business. I don't care what type of strategy you have. I don't care what type of psychology you are good at. If you have no proper risk management, you have failed even before you start. Because actually, let me show you this. Actually, let me show you this. Let me show you this. You see, trading has, let me show you how it is broken down. See, this is contributes to your plan, or what we call your strategy, which contributes just about 10%. See, and then 20% is your risk management. Okay, then the remaining 70% is your psychology. So we will talk about this later. So please just stay tuned, subscribe, so make sure that you cannot miss out on any of these things. So going forward, we want to talk about this. Sorry for that, please. Going forward, these are my checks, the checks that I use to make sure that I don't lose a lot when I am losing. See, trading is not only about making money. It is also about not losing much. You see, in this business, whether you like it or not, you are going to have losing trades. And it is inevitable. Everybody, in fact, every successful trader has losing trades. And if you're not ready to lose trades in this business, please, you have to, it's the wrong business. I'm sorry, I can say it's a wrong business, because you will lose trades. But a lot of successful traders actually even lose more than what you would think about, okay? So, I personally know of traders who are extremely successful, but with only a win rate of about 35%, okay? And this means that they're actually wrong 65% of the time, okay? But yet they are very successful. They're running hedge funds, okay? So, please, just in reality, this is the reality of trading that no one talks about. So, but yet you don't even need to have a win rate of 35%. Okay? What I really need, what personally, I have a win rate of about, I've always said this in my videos. So in a good, super proper month, I can have a win rate of 70%, but I don't need this. What on average I can get as a win rate is about 50%. And this is immense. This is too high, according to me, because it makes me very profitable over time. So, this only works after an average of about, in fact, if you want to follow this, take an average of about 100 trades, okay? Anything below 30 trades you can't even talk about that. So you have to make sure that the minimum is about 30 trades and above, okay? Minimum is 30 trades. But on average, if you have about 100 trades, that's okay. That's fine. So, what do I do when I am? What are the measures that I take when I'm taking these trades? You see, when you're in a trade, what a lot of traders don't know is that there are other factors. You can no longer control a trade. Once you're in a trade, you are in a trade. You can't change anything. So what happens is that sometimes you're in a trade and a major news comes up. So when major news releases come up, they can interfere with your trade. What we always say is that in trading, the first thing is that you must put what we like to call a stop loss, okay? So, and this is what we assume, that a stop loss will guarantee that you don't lose what you are prepared to lose, okay? But in reality, sometimes your stop loss will not guarantee that you're not going to lose any more than that. So, one of the things that happens that interferes with your stop loss is during times of very high volatility, like in major news release. During major news release, the market will easily gap up or down, or the market can easily gap beyond your stop loss, and it will make it in such a way that you will be exposed towards losing more, because your orders will not be filled, okay? Your order or your broker may not fill you up, may not fill up your orders. So you can't blame your broker in such scenarios. All you have to do is to make sure that you know what to do. There are traders, actually, there are successful traders who trade major news release, and they are there. But to me, it's not my thing, and I don't believe in trading during high impact volatility news, because I've backtested a number of times and a number of years, and I've come to realize that I cannot be profitable when I'm trading in such news releases. So please, if you think it works out for you, please, you can leave a comment down there in the chat box. Just leave a comment and tell me if it works for you. So the other thing that a lot of traders don't look at is trading during high or low volatility times, where the spreads are very huge, okay? So there are times like during overnight, holding trades overnight, When you hold trades overnight, you expose yourself towards market gapping. That's the second thing of gapping, market gapping. And then the other thing is that when the market, during those hours, the spreads widen. Your broker, if the spread has been this much, maybe about 1 pip, okay? During such times, like during night hours, overnight hours, during very high impact volatility, like created by news release, your spreads are going to widen. Do you know the meaning of a spread widening? When a spread widens, it means that for you to get out of this trade, it will be much easier than it was before, because the spreads are wide. So even before your trade gets to hitting, let's say this is where a stop loss is, and the price is there. Even before the price hits your stop loss, this time the spread has widened, and it is from there to here, from here to here, okay, which was previously from here to here, okay, which was previously only this. Right now it is from this area to this area. So the moment the market just chops down a little bit to this area, you are going to lose that trade, or you're going to get stopped out of that market, and which means, of course, losing the trade. So you don't usually want to do what? To be stopped out because of such issues, okay? So that is about what? About the spreads. So please, you have to make sure that your spreads are, you take trades during times when the spreads are low. Then the other thing is, what traders don't talk about, what the so-called gurus don't tell you about, is about this something that I like to call the casino concept. In the casino concept, now if you've never done betting, or you've never gone to a casino has a statistical edge against the player in this business. A casino, how does that come? A casino has about something that is close to around 50, at least 5%, sorry, about 5%, about 5.4% of an edge better, or an edge to be right than the player. So in every, let's say in every 1 million that the player has bet, a casino has about 54,000 that they are sure, okay, that they are sure to at least to be right, okay? They know that the 54,000 is theirs, banked, even before you start betting. So what does this mean? It means that a player, or you as a trader, you have to make yourself to be the casino. How? Of course, there are a lot of things we consider. For example, we look at increasing your age statistically, like in the previous video. You can look at how you can increase your age following the other confluences when you're placing your trade. And then also we look at how much you're going to risk, okay? So when we look at when you come to risk, how much you risk, again, this is a very huge misconception that traders have, which is wrong. Traders have got it wrong, that actually you have to risk much to get much. Yeah, but you see, that is wrong. That's a very wrong mindset that I am sure of, because I've tried it, I've tested it, I've lost lots of money, I've blown a number of accounts to come to realize that it doesn't work. So there is absolutely no way in which you are going to risk maybe 10% and you think you are going to make 100% overnight. So trading is a numbers game. You have to take it slow, take it gradually, take it over time. I always say I have a goal of about 1 year minimum, but I always even put it at around 2 years, 3 years, 5 years. If you do that, I can guarantee you that you're going to see success in this business. I personally recommend any trader, or any new trader actually, any new trader, to risk between 1 to 3% of your personal account. When it comes to FTMO or funding talent, or sorry, my FX funds, because of course, you know, funding talent has gone downhill. So when it comes to funding talent, FXCM, FTM or challenges, when it comes to trying to pass your challenges, I advise you risk about 1.2% per trade. And again, I advise that you take one trade at a time, that you don't take more than one trade at a time. Okay? Personally, on a personal account, I advise that you risk between 1 to 3% on a trade, and up to 5% in total for total exposure, total risk exposure, up to 5%. I advise that you make sure that your risk never at any one time goes beyond 5%. That's for a personal account. And by this I mean, if you're risking 1%, if you want to take 5 trades at once, then you should risk 5. You can be in 5 trades, okay? But if you are risking, you can risk 2.5% per trade, and you'll be in 2 trades. You can risk 2% and you'll be again in 2 trades. So my personal preference is I risk about 3% on a trade. That's for a personal account. I risk 3% on a trade, and the maximum of 5% total risk exposure at any one time. But if I'm risking a challenge, trying to pass a challenge, I will show you. I also have my own personal challenges that I do, or I try to trade on a personal account, and again I'll show you how I do that. So that is usually what I encourage. You know, risk management, when it comes to risk per trade, it varies from trader to trader. Okay, personal risk varies from one trader to the other. But what I recommend is that, you see, when you're risking, when we are using a challenge, let's talk about a challenge. When we are risking, sorry about that. When we are talking about a challenge, okay, and you're risking 1.2%, first of all, you have a daily maximum daily drawdown. Maximum daily drawdown is strictly going to expose you to, even if you took 3 trades for the day, okay, you are going to have a maximum exposure of 3.6% for the day. Remember, your maximum daily drawdown that you are given in a challenge is 5%. So you cannot reach that 5%. And yet you have placed 3 trades. Okay? You get? So then the other thing is that you have a luxury of being 8 times, of placing 8 trades in a row and still be in the challenge. Okay? So that is one thing that I recommend. So please, when we are doing this, when we are risking, those are the parameters we have to look at. You look at your risk. You look at your risk per trade. You look at the number of trades that you require to blow your account, or that are required for you to reach your maximum daily drawdown, and then the maximum overall drawdown. Okay, so the overall drawdown. Okay, so you need to look at the maximum daily drawdown for a challenge, which is 5%. You need to look at the maximum drawdown, which is 10%. How did I get the 8 trades? By the way, I came to these 10 trades, which is like 10% divided by 1.2. That's how I came to 8 trades, okay? So I can place 8 trades and still be in the business, okay? So when I'm looking at my personal account, when I am looking at my personal account, where I risk, even if I risk 4% on a trade, okay? In this scenario, I will never take 2 trades at any one time. I will never do it because I've never done it, and I will never do it. I cannot risk more than 4% total exposure at any one time. So I risk 4% once, and then I will have only about 2 trades to trade for that day. So if I'm risking 4%, for me to blow my account, do you know how many trades I will need? It will be 100% divided by 4%, which will give you 25 trades. I will need 25 trades. That's the reason why I always say that there are advantages towards trading trading a funded account, which has a lot of restrictions, which is, again, it is good. It gives you a lot of leverage, a lot of capital. And then there is also some different, which are also good advantages, which are in risking and trading your own personal account. So a personal account comes with such advantages, which you can't get again in a funded account. I'm not saying a funded account is bad. A funded account is really good because it gives you the capital. You have the capital at your exposure. A personal account, yes, it has advantages when it comes to scaling in, and then that compounding, as we shall see with time. Just smash that like button. Don't forget to smash the like button. Please subscribe for this on this channel. Just down there, press the subscribe button and like and comment. Comment anything about you're seeing, what actually works with you, what you see is comfortable with you, or how much do you risk per trade. Please tell me in the comment below, and I will reply. I will make sure that I'll take my time to reply to every comment that you're going to leave down there. So I have an exposure of up to 25 trades, okay? To be wrong, to blow the account. So nobody talks about this, okay? So here are traders who come and start swelling on YouTube, and they show you how they grew an account of $5, five US dollars to one, maybe to $1 million US or 10 million US dollars in a trade. See, this is wrong. This is not true. They don't do this. Even for those who try to do something of that kind, they will never show you how many accounts they've blown before doing that, before achieving that. So I have 25 trades to be wrong, to lose the account. I don't have one trade to lose the account. I have 25. So I have 25 trades, and then, okay, let's. So I've showed you that. Let's go to let me show you the other thing that I use to keep me in this business, to keep me in the game, because actually in trading, the longer you take in this business, the more the chances of you being successful. The shorter you take, if you want to come and risk all your entire account and risk let me give you an example, a scenario of those guys who do that. They come and risk 20% on a trade, 20%, and then 20%, and then 20%, and then 20%, 1, 2, 3, 4, and then 20%. They only have 5 chances, 5, just 5 to blow the account. And I can, let me show you this. I've been in trading for over 2 years of trading a personal account. I've traded for over that period of time, and I've come to realize that sometimes in a bad time, you will even lose up to you can lose up to even 8 times in a row. So how will you survive this? You can't survive that. Okay? So, and the other thing is that what we are going to talk about later is what is called the number of trades, the number of losses that you take a day. Personally, I risk up to, I place up to a maximum of 3 trades a day. I don't place more than 3 trades a day. Maximum will always be 3 trades. Why do I do this? I do this to try to check on my psychology. If you are placing too many trades a day, you are going to run out. Your mind will run out and the emotions will run out, and when you take a loss or you take 2 losses in a row, you are going to lose it. The blinkers are going to go off and you are going to lose the entire account. So what I normally do is I look at 2 trades. I recommend that you set maximum number of losses of trades a day to be at 2 trades. This, I've come to test this, I've backtested this, and I have seen that when I lose more than 2 trades in a row, I tend to start tweaking my psychology and then I mess up. So if you can do this, I am very sure it can help you. Then the other thing that traders actually don't talk about, you see, there is this issue of risk-reward ratio. Risk-reward ratio varies from trader to trader, and then it depends. Of course, risk-reward ratio and a win rate are 2 things that you are going to trade for one another. Because if you have a higher risk-reward ratio, obviously you're going to have a lower win rate. So what is the right thing to do here? It is to have, I came to realize that if I have an average risk-reward ratio and it will give me an average win rate, then I am good to go. Because if I have an average win rate, first, it will not dangle with my psychology and cause me to start making mistakes in trading. If I have a win rate of about 50%, then at least, yeah, I know my psychology is going to be intact. I can control my psychology, my emotions with a 50% win rate. And I know at the same time that if I have a risk-reward ratio of about 1 to 2.5, I know that this risk-reward ratio is good. Because most of my trades, I've ever traded 1 to 3s, and 1 to 3s has always been, sometimes the market, most times I would not reach there, and then the market would reverse and disorganize my psychology. So I've come to realize that 1 to 2.5 works for me. So I risk 1 to make 2.5. Okay, so this, even if I have, by so doing this, if I have a good number of trades, if I have like 10 trades, if I place 10 trades, 1 2 3 4 5 6 7 8 9 10, and I'm right, even if just 40% of the time, 1 2 3 4 40% of the time, and this 6% of the time I'm wrong, even if I'm only right 40% of the time, 40% of the time, sorry, 40%. So it means I'm going to have these 4 trades times 2.5, okay, minus the 6 trades, okay. So this comes to 10, this comes to 10, this comes to 10 minus 6, which gives you 4%. So I am still up 4%. I'm up 4% after 10 trades. So how long do I take to make 10 trades? On average, I take about 2 weeks, okay? But usually I take about 1 week to 2 weeks, okay? So about 1 to 2 weeks. So on average, that's why I always say that trading is about numbers. It's a numbers game. If you can't read the numbers, here I'm explaining, please. If you're doubting or if you are not understanding it clearly, you can pause, rewind, go back to look at exactly how I am putting it. Please understand what I am saying. If you don't understand, please, if you're not getting what I'm saying, please leave a comment down. I am going to bother myself. I am going to take the initiative to explain to you exactly. My aim in this business is to make sure that I create enough, because I mean, imagine a world where nobody needed any money, but everyone is okay. All right. So please leave a comment below there with your own other suggestions. Tell me how you trade. Tell me how you risk. Tell me your risk reward ratios. Tell me how many trades you take a day as a maximum. Tell me how many losses you take a day. And then the other thing is that there is the other thing that has never been made clear with traders. They don't talk about it, is about how you do your trade management, trade risk management. Now, this varies from trader to trader. Personally, myself, what I do is, how do I manage my risk? How I manage my risk, okay? While in the trade, by the way, while in the trade, okay? How do I manage my risk while in the trade? When you're in a trade, there are different ways different traders use to manage their risk, okay? They manage their risk differently. But what I do is that when I'm in a trade, I make sure that I trade with a risk reward, of course, like I have said, of 1 to 2.5. But then how do I manage the trade? Of course, we have seen, I have to place a stop loss on a trade. I have to place a stop loss. You see, my risk reward ratio is 2.5. My stop loss, and again, I'm not trying to teach you a strategy here. I'm just using this as an example. If you want to see my strategy that I use, please, you can check into my previous videos. You will see one of the strategies I use to profit consistently in this market. So, of course, how do I manage my trades? My risk in managing my risk when I'm in this trade. Of course, the first thing is I will never place a trade without I first place a stop loss. A stop loss makes sure that when I'm losing, I don't lose more than how much I'm willing to lose. Okay, and then of course I set a take profit. I set a take profit. Okay, I set a profit target. Sorry, I set this is my stop loss. I usually place it just below the previous low. This is my entry and this is my take profit or my target. My target, my stop loss, and this is my entry. Now, when the trade moves to a risk reward of 1 to 1, sorry, it's not there. When I have a risk reward of, when it moves to a risk reward of 1 to 1, okay, about 1 to 1, here, 1 to 1, this is risk reward. I will lock in my stop loss to break even. Okay, I will make sure that I do that. Why do I do that? Number one, to make sure that I don't have any other risk exposure in this market. So if I am to ever lose, let me lose only what I'm ready to lose. Okay, I want to lose strictly what I'm ready to lose and nothing more than that. All right, and then the other thing that we have not yet talked about is the issue of the compounding. When it comes to compounding, when you are compounding, one of the biggest advantages of trading, or one of the biggest skills, is to master the art of compounding. Compounding, other people will call it scaling in and the word, but I call it compounding. If you can master how to use compounding to your side, it's a huge topic. We will not talk so much about it here, but in this I'll just make a brief example about it. You see, when you're compounding, personally, I make an average R. An R, when I say an R, it means the number of R's I've got. Okay, Then of course you multiply it by the risk, then your risk exposure, you will see how much I can make per week. But my average R per week is usually about, on average, about 3 R per week. So if I'm making 3 R on average per week, it means if I compound this 3 R, if I have a win, if I'm risking 4% on my personal account, okay, if I'm risking 4%, or let's say what I recommend is 1%, okay, if I'm risking 1%, this is what I'm capable of doing. Oh, this is what you are capable of doing. Even if you're not risking, even if you're not making that 3R per week, even if you're only making, let's say, just 2R per week, and you are risking 1%, or an average of 2% per week, or per trade. This is per trade. This is what you're capable of making. Okay, this is just what you're capable of making. I have a calculator here. You can go to your Play Store, PlayStation, and download it. It is called Profit Deposit Calculator. You'll be able to get it. Okay, if you have a starting account, for instance, if you have a starting account of about 3,000, and again, I want to show you how I can come to this. If I have a starting account of about personal account, I'm talking about a personal account. By the way, we are trying to talk about personal account and funded account at the same time. So please, you select out and you see which one exactly you can work with. If you are looking at a personal account where I've started with an account of $3,000 a week, and in a week, okay, and in a week, I'm making 3R a week. Yet I'm risking, my risk is 4% per trade. This will give me 12%. And then please don't be confused with this average annual rate. It's because the calculator, I've decided to use annual because it doesn't have weekly. But wherever there is weekly, annually, you can call it weekly. Okay, this is weekly rate. Weekly rate. So every week you're making about 12%. So a year has about 52 weeks. In a period of 52 weeks, if you have started with $3,000 account, look at where you are. You're up with a balance of 1 million. You're up with 1,087,573 So please, please, you go to your calculator and it will be able to show you this. How did I do it? You can just come here, type in 3,000. You can type in 3,000. You can type it 3,000. Sorry. Yes. You can type in 3,000. Come here, type into like we have told you, the R that you can make, on your average R per week, and then multiply it by your risk here. Multiply it by your risk. Then you come down, you put the period or the number of weeks in a year that you can get, that you are going to be trading, and then you come to that figure. Okay, so please, if you like this video, please smash the like button. Don't forget to subscribe. Why? Because, and especially, by the way, if you want to know how I manage my psychology, because this is just risk management, we have not talked about psychology. If you want to know how I manage my psychology, how I manage my emotions, my secret way, my secret mental tricks that I use to keep me stable and consistently profitable in forex trading, please, you just have to subscribe. so that you cannot miss out on it for the next time when I create that video. And then the other thing is that, please, if you have to make, if you really want to participate and contribute towards changing other people's lives, and we get rid of these fake people who come and post with Lamborghinis trying to show you what they actually don't do, they don't actually make. They're just trying to buy, to make sure that you buy into their courses. So please smash that like button. We can do this all together. We learn how to trade. We can reach out to very many traders and teach them how to trade. Just if you can do this, if you can smash the like button, if you can subscribe, and you can leave a comment. So please contribute to this. Thanks so much, and please may the good trading be with you. Thank you.